Now that you understand policy provisions, let's discuss property policy limits. Property insurance pays for damage or loss up to the policy limit or the property's value, whichever is less. To prevent people from underinsuring their property, insurers require coverage of about 80% of the property's value to receive full payment on partial losses, a concept called insurance to value in personal lines and coinsurance in commercial lines. Exam tip: for simplicity's sake, this text will use insurance to value and coinsurance interchangeably. However, you must be aware that insurance to value refers to a personal lines policy and coinsurance refers to a commercial lines policy. The licensing exam will not use these terms interchangeably, and the subtle difference between them may actually change the answer to a question you may encounter. Let's say Ming has a home with a replacement cost of $250,000, but only insures it under a homeowner's policy for $100,000. Which common requirement for property policies is Ming not fulfilling? A. Coinsurance. Or B. Limit of liability? C. Insurance to value. Or is it D. Contribution by equal shares? Answer: because a homeowner's policy is a personal lines product, the answer is C. Insurance to value. However, if the question was referring to a commercial general liability policy, then the answer would instead be A. Coinsurance, because now the question is referring to a commercial lines product. For coinsurance purposes, the fair market value is generally used to determine the actual cash value of a commercial property. Personal lines policies and business owner policies also require coinsurance to qualify for replacement cost, RC, coverage without the reductions for depreciation applied to the calculation of property's actual cash value, ACV. These concepts are a little confusing, so let's discuss it more. Coinsurance, commercial, or insurance to value, personal lines, requires the insured to carry a minimum percentage, usually 80%, of the property's replacement cost to receive full payment for partial losses. If the insured meets the requirement, the insurer pays full replacement cost on partial claims. If not, the insured receives only a proportionate amount, a coinsurance penalty. The most important thing to remember when calculating a loss payment using the coinsurance formula is that meeting the coinsurance requirement guarantees full replacement cost coverage for partial losses, even if the required coinsurance amount is less than property's full value. Let us look at an example to explain this concept further. Here's an example for meeting the requirement, no penalty. Sandy's home replacement cost equals $100,000. 80% requirement equals $80,000. Insurance carried equals $80,000. Partial loss equals $5,000. Sandy receives the full $5,000 because she met the 80% requirement. There's no need to do a calculation. Now let us look at a couple of real-world examples in which we apply the coinsurance formula. Example 1, underinsured. Replacement cost equals $100,000. Required 80% equals $80,000. Insurance carried equals $40,000, which is 50%, not 80%. Since it's not a total loss, we will need to use the formula. Before we can start the equation, we need to know the last factor, the partial loss amount or how much the claimant needs for repairs. In this case, it's $4,000. Let's start the formula. $40,000. The insurance carried will be divided by $80,000, which is 0.5. You then multiply $4,000 times 0.5 or 50%. The partial loss amount is $2,000. The insurer pays $2,000, 50% of the loss. The owner will be required to pay the other $2,000. Exam tip: in replacement cost coverage scenarios, remember to divide the amount bought by the amount needed to satisfy the coinsurance requirement, not the actual value of the property being insured. In this case, we divided by $80,000 rather than $100,000. Also, you may need to calculate the amount needed by multiplying the coinsurance percentage by the value of the insured property. Example 2. Underinsured with ACV calculation. Let's say the insured property has a replacement cost of $100,000 and the insured's policy has an 80% coinsurance clause. The insured only has a total of $60,000 of coverage in force. If property suffers a covered loss with an RC of $10,000 and an actual cash value of $7,000. How much will the insurer pay? Let's look at the key factors. First is replacement cost equals $100,000. The next key factor is insurance required, which is 80% of the value. 80% times $100,000 replacement cost equals $80,000. Then, there's the insurance coverage that the insured actually has. If you remember that from earlier, their policy is only $60,000. So the insurance in force equals $60,000. Per the scenario, if property suffers a covered loss with an RC of $10,000 and an actual cash value of $7,000, let's take all of those key factors and put them into the formula. $60,000 policy in force divided by $80,000 insurance required. That equals 0.75. You'll take 0.75 times $10,000 RC to figure out the settlement amount. The answer is $7,500 because the policyholder is underinsured by 25%. An $80,000 limit was needed, but only $60,000 was in place. As a result, the insured is subject to the coinsurance penalty and must share in the cost of the loss to the tune of 25%. They still receive more than the ACV of property lost, which was $7,000. Please note that if the ACV of the damaged property were $8,000 instead of $7,000, then the insured would have received the higher ACV amount. Next, let's review total versus partial loss. Total loss rule says coinsurance never applies to total losses. The insurer simply pays the policy limit. In this total loss example, the home value equals $200,000 and is insured for $100,000. How much do you think the insured will receive? This one is really simple. Since the insurance policy is $100,000 and the property is a total loss, the insured will receive $100,000 minus the deductible. Yes, there is a loss, but that is the policy limit. Partial losses are far more common than total losses. These losses are where the coinsurance provision will apply. Let's look at a partial loss example. Don't forget coinsurance applies. Home value equals $200,000. Insurance equals $100,000, only 50% underinsured. Partial loss equals $40,000. In a situation with partial loss of $40,000, the insurer pays 50% since it's only halfway insured. You can figure that out by dividing $100,000 by $200,000. 50% of $40,000 is $20,000. The claimant will receive $20,000. Let's take the same scenario, except change one thing: the amount of insurance. If the home had $160,000 insurance, 80%, the insurer would pay the full $40,000 minus the deductible. That's why it's important to make sure that insured are properly covered. Exam tip: be alert for questions on a state insurance exam that appear to ask for a coinsurance calculation, but at the same time describe the total loss of one's property. Remember, the coinsurance requirement only applies to claims for partial losses, not total losses. Similarly, don't fall for the trap of selecting the property's replacement cost as the answer to a total loss coinsurance question. The policy limit is the maximum that will be paid for a total loss, regardless of the property's total replacement cost. Let's test your knowledge with two questions. Question 1. Kerry suffers a total loss of his home valued at $300,000. Kerry insures the home under a homeowner's policy with $120,000 of coverage, and the policy contains an insurance to value requirement of 80%. How much will Kerry's insurer pay for the loss? The correct answer is $120,000. Why? Because the question is about a total loss, we do not need to worry about using the coinsurance formula. In a total loss situation, the insured will only receive the amount that the property was actually insured for, which in this case is $120,000. Don't forget to subtract the deductible if the question contains one. Question 2. Kerry suffers a total loss of his home valued at $300,000. Kerry insures the home under a homeowner's policy with $120,000 of coverage, and the policy contains a $1,000 deductible as well as an insurance to value requirement of 80%. How much will Kerry's insurer pay for the loss? The correct answer is $119,000. We still do not need to worry about the coinsurance formula because the question is about a total loss. Carey will receive his policy limit of $120,000 minus his $1,000 deductible. Great job! You have learned about total and partial loss calculations. Now you're ready to learn more about liability limits in the next video.